Okay, here we are at journalizing adjusting entries. And the adjusting entries for this particular company, there are 1, 2, 3, 4, 5, 6 of them altogether. First one is accrued fees earned, and they have an agreement with the local radio station that they will send them disc jockeys when they need them. There's not been any billing yet. So, but they have earned, it looks like 50 some hours, and they get paid $40 an hour. So they've earned $1,400 that has not been put into the books yet. And this is now going to be put on the books, and that's done by doing a fees earned credit for $1,400 and putting it into accounts receivable to this radio station. The next one is a typical one. They've gone out and they've counted their supplies. If you remember, their original account or amount was $1,020. Well, gosh, all they have left is $275. Now, if you subtract that from the original, you'll find out that they have used $745 worth of supplies, and that needs to be recorded. Insurance expense, remember I talked about that prepaid was going to be pulled out, so each month it costs $2,700 for a year. They're going to divide that by 12 months and come up with $225 per month. So we have an expense here, and we're going to remove some of that from the prepaid insurance account. Depreciation, I talked about they had equipment. Well, they're depreciating it. I can't remember how much they had, but the depreciation expense is $50, and we've got a new account called accumulated depreciation that's called a contra account that's going to counter the original asset. We have the unearned revenue, remember? Well, they've earned half of it, so it was at $7,200, so we're going to divide it by 2 months because it was a 2-month contract type, and so they've going to remove $3,600 and put that into my fees earned. And finally, we look at our wages. We're in the middle of a week, evidently, and the receptionist has earned $140 but not been paid yet. So we do want to include that expense against the revenues we've earned. So I create a wages payable, which is a liability, and then a wage expense. And those are our adjustments. Now that'll bring our revenue and expenses together, kind of reconciles them for that period, and you would end up with, and you would post these to your general ledger, all of them, and change your balances, obviously. And then you would pull off another trial balance. Only this one's called the adjusted trial balance. And you'll notice the last one was at $40,000. Now look at this one. We're at $42,000. And we balance, and that's a good thing. Another way to look at this is to, I don't know if it, no it didn't. Another way to look at this, and it's easier to see it all at once, is to look at it in worksheet form. And here's the worksheet. If I can make it work, let's go down here and stretch this out. Bear with me here, folks. Here you go. Now, see, this actually matches these numbers. So you can see cash 40, cash, here it is, cash 94.45, accounts receivable 4,100. All I've done to make this worksheet is this is my unadjusted trial balance. I pulled all those figures out into here. These are my entries, and they coincide color-wise. So I've got debits here and credits here. I have debits here and credits here. These are my actual journal entries. Now I can take this and I can come across and have my adjusted trial balance right here, which is going to make it very, very handy, because now I can pull those amounts off and create an income statement and a balance sheet right in front of me, with all of my figures right in front of me. And that's what we're going to do next. We're going to look at how to create the financial statements, because we're ready. Can you see how we work this? I had $14 here, $1,400. That adjustment was for unearned fees or accrued fees. It increased my accounts receivable, so it was added here. And it came down to my fees earned. I had two adjustments, and that was the $1,400 and the $3,600, which gave me $5,000 here. So now, next, we are going to look at doing the financial statements here and here.